All right, hello. Welcome everybody. I think I accidentally scheduled the crypto report wrong. It looks like I scheduled it for today as well. That's supposed to go tomorrow, so I'll reschedule that. I apologize for the confusion when I set these up Sunday night or Monday morning. Sometimes it confuses me because I'm not in Eastern Standard Time and everything that I have to schedule is on Eastern Standard Time. And so I'm thinking about dates, I'm thinking about time conversion. Unfortunately, sometimes it slips up. So apologize, but welcome to today's session, TTI Options Pro Strategy session. This particular session has been very, very fruitful over the last couple of months. We're just talking about this in the Discord. The main focus of these shorter term trades, we're going back to kind of our roots, right? When we started TTI, we were not necessarily a short-term trading group whatsoever, but we typically targeted 45 to 60 days out. That was really where we made a lot of our money. And what we realized over the course of a couple of years was that a lot of the edge that we had from our equities swing trading strategy correlated to the swing trading strategy from an option standpoint as well. And so we started to elongate our time frame all the way out to about 180 days. And it's worked very, very well for us over the last couple of years. So we're kind of coming back into that shorter term focus on these Wednesday sessions. It's a great way for us to be able to capture some alpha on the short term. And I want to focus on the fact that a lot of these trades that we're in right now, I posted this yesterday, but something to consider here, folks. A lot of these trades that we're in right now, that you might have a portfolio that looks like this, where you have a lot of these trades that are free meaning they're up and over 100%. Been talking about this all morning in Discord. We opened a lot of this exposure based off of this short-term strategy session. So the NVIDIAs, for example, we were buying the Julys and August back in late April, early May, and we were able to flip those for profit and then kind of average into those Januaries, which are now free as well. And we did that with a lot of different names. All right, we did it with some Microsoft, we did it with some Ethereum, etc. And so I want to continue to point out that this particular session in itself is not exclusively short-term focused. In some instances, we're taking the short-term exposure and then using the trade if it works to get into some longer dated stuff, right? It's a way for us to finance longer dated positions because at the end of the day, if the longer dated positions don't work, we don't want to lose a bunch of money in our account. Instead, what I would like to lose is house money. And house money comes via those short-term plays that we take for profit and then roll it out. Conversely, we also do occasionally take some trades that are only short-term. So it's very important to understand which trades we're looking to actively roll and which trades are a hit it and quit it type situation. And before I get into my early morning brief here, I just want to talk with a question about BBAI. Are we looking to average back into BBAI now that it's down? No, right? Great question earlier today, but the setup that we were looking to target, which worked great, this went over 1,000% for us on the options contracts, was a simple volatility squeeze. We had a consolidation fractal with the RSI bouncing off of the 50. We're up here in no man's land. The contracts are in like just wildly overpriced. Volatility is through the roof. So the edge that we had earlier in BBAI is no longer there. So we're just moving on. Very important distinction. Some of the trades we're hitting and quitting. Some of the trades we're looking to roll. So it's important to listen to these sessions and then also read the market research side so you know what we're trying to do with the individual positions. Okay? So let's talk really quick. SPY and the Qs. I'm going to continue to say it until it happens. And for everybody's sake, I hope it doesn't happen, but it probably will. There will be a pullback at some point, folks. We know that the levels that we're looking at are reasonably the previous all-time high. The further we get extended off this all-time high, then less and less chance I think that the all-time highs are going to be tested. But at some point, we're going to have some sort of pullback in the S&P 500 and the NASDAQ. Both of these are extended. We can see some of the short-term momentum slowing. We can see market breadth slightly degrading. Tech is not following through with the same sort of breakouts. We're in the middle of earnings season and we're coming into some weak seasonality. It's reasonable to expect that we will be seeing some, at the minimum, chop, at worst, a pullback. And that's what sets us apart from other groups, from other traders, from other investors, is that most people, when you see a pullback, look to run. Sell everything, short everything, etc. We are not that group. As long as the data suggests that offense remains on the field, as long as the data suggests that higher prices and assets are on the way, we want to use pullbacks as strategic opportunities to add into areas of the market that maybe we don't have enough exposure, or if there's underlying sector rotation. Meaning, if tech takes a breather, consumer discretionary starts to outperform, we'll start buying some consumer discretionary plays in the short term and then potentially roll those out to long term. Energy, anything, right? I mean, realistically, the entire market can open up on a pullback. So pullbacks are not the enemy. Yes, maybe open P&L will dip slightly in the short term, but the long-term pullbacks are buying opportunities. The Qs as well, just want to continue to point this out here. The all-time high is kind of that line in the sand. The further we get extended off of this, the less and less chance we actually see the all-time high get retested. I would be very surprised to see a 5% pullback this month. That's not generally what we see in August. Obviously, anything can happen, but I'm expecting a pullback. Do we see as violent a pullback as about 5-6%? I don't know. I will be looking to buy regardless as long as we're holding above those all-time high pivots. So we all got to be on the same page inside of the group because when the pullback occurs, some people are going to freak out. Some people aren't going to know what's going on. For those of you that are here and you're listening to this every single day, you're like, Hamilton, please shut the hell up. I say it every single day, so when it happens, it's like we have control over the situation. Okay? XLK, obviously super important for us in the market in general. When the tech sector is leading, things tend to just perform better. And it just so happens that the ratio that we were looking at yesterday, the tech versus the S&P 500, we talked about this, is up into about 2% away from all-time highs. We break this, it's a big deal. Once again, if the tech sector breaks out against the S&P 500, it doesn't mean that we're getting 12 months straight of up only. It just means that we're going to have 12 months straight of tech outperforming, and that's where your capital goes the farthest, okay? Don't go and buy consumer staples names. Don't go and buy real estate names. From a trading perspective, at least, you want to go where the strength is, and the overperformance statistically will be tech if we break above the 4-3 area, kind of this proprietary gray box. We're very, very close, folks. We called it back down here, and we've held it the entire time, and it's been the right trade. Semiconductors as well, obviously super important for us and the market. This is arguably the most risk-on area of the market over the last couple of years. Highly cyclical, continuing to press up into all-time highs after a year-long consolidation fractal. Continue to point this out. Not only was it a year-long consolidation fractal, but if you look at the drop down, that is a bear market move. That is a bear market move. The semiconductor industry group lost 40% from June of 2024 or July of 2024 through April of 2025. That is what you see in a bear market, which is why it would be highly unlikely to see semiconductors break back out to all-time highs right here and just stop and then reverse back down. Very much not normal. I don't even want to think about it because it's just so far-fetched. Does it mean semiconductors are going to continue to go parabolic like they have been? No. Just means that this latest breakout into new all-time highs will probably continue over the intermediate to longer term. I'm targeting 350, 360. Tech, semiconductors generally moving in the same direction. Both of these are breaking out into all-time highs, and tech is breaking out against the S&P on a relative basis as well. This is not a time to hide, folks. It's not a time. Sometimes it's not a time to go and buy everything under the sun. If we're kind of looking for a pullback, we're showing up capital to buy stuff, that's fine. But remember, the bigger picture here is that asset prices will probably continue to go higher, and we're in the areas of the market that you want to be in. Crypto is slowly continuing to perform well, right? There's a lot of frustration, hopefully not in here, but frustration out there in the market. They think that if Bitcoin's not going up 10% per week, it's dead. These folks are never going to make any money over the long term because they have TikTok brain rot, you know, the 5-second attention spans. Totally fine here, folks. As long as we're above 3 trillion, we want to continue to hold into Bitcoin, crypto in general, and Bitcoin holding a sideways consolidation fractal after a big pop up is par for the course. We saw it here. We saw it here before the tariff breakdown. I mean, this is just normal stuff for Bitcoin. Big pop up sideways, big pop up sideways. You can see it through history. Big pop up sideways, big pop up sideways, tariff. Big pop up sideways, you know what I mean? So it's like, think about primary trends. Is Bitcoin more than likely to go up or go down? Position yourself accordingly. Ethereum obviously still showing overperformance here. We still want to continue to be long Ethereum with a lot of vigor here. We expect Ethereum to outperform Bitcoin for at least the next 9 to 12 months. This is not a short-term trade here. I do want to point out, though, once again, that Ethereum can outperform Bitcoin even in an event where Bitcoin and Ethereum are going down. It's if Ethereum goes down less than Bitcoin, this ratio will still go up. So on an absolute basis, we need to match it with the relative basis, which so far it is. Solana, still super long there as well. Don't care about nailing the perfect entry. I still think that as liquidity raises, Solana being a blue chip, and outside of Bitcoin and Ethereum will continue to rise. So everything, you know, none of this is a big surprise. We know that we're coming into some seasonality issues with August. Things have just run for 3 months straight. I think people are spoiled. I think people don't know what they're doing. They caught trades late, and now they feel like they're stuck, or they feel like they're buying the top. Let them. Probably not the top. Asset prices probably continue to go higher. That's how I'm positioned, and hopefully you guys are within the same sort of idea here. Let's talk seasonality really quick. We can actually look at seasonality for those of you that don't know. There's a great indicator here called seasonality. You can actually go and pull it up. And I'm going to just focus on this particular indicator more than anything right now. But this is the S&P 500. Going back to 2015, you can kind of see how August has run, right? August is not necessarily the best month. It averages 0.24% going back to 2015, which is one of the worst performing months out of the year. Once again, that's not to say that August is always bad. It's not to say that August has to be shorted. It just tells you that when we're coming up into August, that this is arguably not going to be the greatest month to hold risk assets, right? Or assets in general. If you look at the Qs, down here at 0.98, which is still far away from the 4.5% we saw in July, which came through, by the way, June, May. Look at this stretch here, 4, 5, 6, 7, 8, 9, about 10% from May through July. Now we're heading into August and potentially September. All right, so just keep in mind where we're at seasonality speaking wise. Do we expect the Qs to continue to rip at the same pace they ripped at in July and June? No. Is it time to sell everything and run away? No. As you can see, some of the concentrated efforts in the Qs for September were in the early 2000s, or 2020s, excuse me. I can't believe I said 2000s. I'm dating myself. Last year was a great time to be long the Qs, right? So take seasonality with a grain of salt. It's like trying to predict the weather. You can understand and prepare yourself better if you know, historically speaking, that maybe in the summertime, you don't need to be wearing a goddamn Arctic coat, and in the wintertime, you might not want to be walking around in shorts and flip-flops. Maybe it's hot in wintertime, or at least warmer in the wintertime for a day, but overall, you know you got to dress warmer, right? Same thing with seasonality in the markets. We set the tone, we set expectations, and we trade around those expectations. It helps us hold through consolidation and pullbacks while keeping our mind on the bigger picture. And then something that Josh brought up, which I thought was cool, is he was looking at was Bitcoin seasonality, which I thought was cool. You can go back and look through Coinbase as well. August tends to be a pretty okay month for Bitcoin, as well as July. It's not that big down month like everybody expects. Everybody thinks that Bitcoin, if it's not ripping 10% per month, goes down. It's just not true. It's just simply not true, folks. Okay, so once again, we're hunkering down. If we get a pullback, we are buying the pullback. Please, 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 unless the data shifts so much that it doesn't make sense to buy the pullback, be in the mode to buy the pullback. Last thing I want to talk about really quick is kind of this AI bubble theme. We're going to be taking an AI bubble theme trade today in the short term. AI bubble has a lot of different moving pieces. I read an interesting article yesterday that the semiconductor space led through NVIDIA is not necessarily the bottleneck anymore. That's not to say semiconductors aren't going to continue to perform well, but this isn't the bottleneck anymore in the AI bubble. And once again, not trading this, but it is interesting to think about. The bubble, or the bottleneck, excuse me, now is the energy side of what's going on here. And we have some of those trades on, and we're actually going to open one today as well. But if you think about it, names like GEV, which some of you guys still have exposure on, for those of you that feel like you ever missed a trade, I was very long GEV right here, and I held all the way through here, and then I got dumped on through the Chinese DeepSeek, and then I got basically squeezed out of my position over the next couple of months from February through April, and then I failed to regain my position in GEV. This was, or arguably would have been, my trade of the year had I been able to average back in, but mismanagement. I've been doing this for 15 years, and you still miss some stuff. There's a lot of guys in the Discord that own this because we've talked about it every day in Discord. But, for one reason or another, I was either over allocated or I just didn't buy it on that day, and it's just gotten away from me. So great example here of a name that, leading name, knew it early, and still missed it, unfortunately. Another name that looks good here, TLN, which I want to point something out. Hopefully when I show you guys this stuff, and what sets TTI apart from other kind of services and communities is that I'm not a chart monkey. Meaning I don't just sit there and churn out 75 charts every hour like some of these guys do on Twitter and other communities. I try to put our focus into a core grouping of charts and understand what we're trying to accomplish in the market. So when I show things like the profit pictures in TLN, it's not to sit there and say, look, everybody, these guys are making all of this money. It's to show you guys that, look, not only do we have the charts, but we also have the trades on the back end to back it up. So here we have Dustin, member of the Discord community, up over 40 grand right now on TLN. We have a bunch of people in TLN, Billy as well. A bunch of people in TLN right now over on the Discord, and realistically, it was just a BRB, right? Got the breakout, waited for the pullback in towards the 260 area. They bought it, they caught the ER pop, and here we are off to the races. This is another one of those AI bubble trades. So hopefully when I'm posting these profit pictures, it's not like, hey, look at me. It's, hey, not only are we showing the charts that we want to take advantage of, but here's the end product Not enough communities show that. It's very easy to show 75 charts every 5 minutes or whatever. It's very difficult to hold these trades and actually make any money. So hopefully that's not only inspiring, but also shows you that the back-end process works. It works well. Okay, so AI bubble theme, semiconductor, and this energy play, which leads me kind of to the last thing I want to point out here before we get into the 3 trades. A lot of people here, particularly technicians, some newer chartered market technicians I've seen over on Twitter are saying, is this really a strong bull market if utilities are breaking out into all-time highs and technically one of the leaders of the year? You think about utilities, your grandparents were invested in utilities, Dominion Energy, things like that. These are things with like super low volatility. They don't move a lot. They're more defensively positioned. You'll see financial institutions rotate into utilities during bear markets because they go down less than the broader market and they pay out a nice dividend on the backside as well. But here we have utilities participating in this bull market. So you have a lot of people that are sitting there like, I don't really trust what's going on. Here's my counter argument. If you actually go and dig through XLU, which if you've watched the Profits Over Profits framework, which everybody in here should because it's free on the market research side, watch the first video. What we like to do is deep dive ETFs because we can see the components of those ETFs and how they're performing, right? XLU is up on the year, one of the better performing sectors. If you go and dive into it, you're going to notice that a lot of the biggest winners in XLU are, drumroll, AI bubble trades, right? They're AI bubble trades. So yes, you do have the old school Dominion Energies and things that move maybe 0.5% per day. But you also have the big high beta AI bubble trades that are skewing XLU higher. So the bottom portion of XLU might only be up 1% this year, but the other stuff is up like 30, 40, 50%. So it's pulling XLU up. So for me, I look at XLU as an extension of the AI bubble play because it has a lot of the nuclear stuff in it, has some uranium stuff, right? So it's an AI bubble trade for me. Does that mean I want to go out and own the XLU sector or XLU, the utility sector? No, but we can own a couple of the components. Okay, so 3 trades. I'm not going to go into any of the management stuff, but I will give a shout out to SMCI. SMCI up over 200% today. Something we might add into. We're not going to do that today, but something we might look at adding into relatively early here is SMCI. We'll see how this shapes up over the next couple of days here. We have earnings coming up in 6 days, so we might just want to hold this. But 3 trades we want to put on right now. APLD is one of them. Let's see here. I will read the comments in a second, but I'm glad you guys are asking. Okay, APLD. So this is a chart that we've had up for a while. We're going to go ahead and try to get back in around this $10 area. We originally looked at the $10 breakout. Some of you guys grabbed it. I did not, but here we are basing again at the $10 area, and I think there's an opportunity with the RSI holding at 50 to be able to get into it. We do have an earnings report. Let's go ahead and we have an earnings report after hours today, so if you don't want to get into it right now, you don't need to. You can wait until tomorrow, but if it gaps up, it might get away from you, so this might be a play that you want to take and assume it goes to 0. Entirely up to you. This is a crypto-related play. So remember, we're not bearish crypto. We're not bearish risk. We're just taking our pot shot. That's all we're trying to do here. There's an opportunity to grab the APLD September 19th contracts, $15 calls. There's an incredible amount of volume on them right now. I have no idea why. It's not me. There's like 5,000 of these opened up so far, if I'm not mistaken. We can get them for about 85 cents a pop right now. So it's a relatively cheap play into an earnings report that has direct Bitcoin or crypto correlation, which is essentially what we're trying to do. If we get up and over the previous highs that we hit a couple of weeks ago, these things can run for an extended period of time. Once again, it's a high beta crypto-related play with earnings after hours. You don't need to bet the farm on this, folks. You can just, throw a couple bucks at it and see what happens. This is not something we're probably going to be rolling out to the long term, so this is strictly a short-term play to take advantage of the structure that we see here. All of the non-negotiables are hit, and it's also part of the area of the market that we want more exposure in. It gives us a catalyst to play into today. High risk, high reward. Don't bet more than you can lose on the APLD trade. Okay? Applied Digital. The next one, I said we were going to grab one of those energy-related plays. I'm telling you, I've been focused on trying to grab a shorter term play to be able to parlay into a longer term trade, and I'm pulling the trigger on VST today. Some of you guys already have this, so if you do, don't add into it unless it's already free. But I really, really like This particular play, the 240 calls for approximately, this can be a little bit more expensive, but it's because it's part of the AI bubble trade, right? So like the the $240 calls for about $5. They're probably a little bit more expensive now because when I looked at this earlier today, price was not up a couple of percent. It's now up 3%. But essentially, I'm looking for a move in about a week through earnings. If you look at GEV and you look at TLN, I cannot predict earnings. I have no idea. What I will say is this particular industry group has shot up after every earnings. GEV shot up, TLN shot up. I'm going to assume that VST follows the industry and responds well post earnings. So I think there's an opportunity here to get in on the short term for the 240 calls for about $5. AI bubble trade, if the earnings report works and we're able to flip these for free, this is one of those trades that we might be able to leverage out until January of 2026. That's the goal here. So short term 240 calls, $5 approximately. Don't bet more, you can lose. We have earnings coming up. Best scenario here would be able to flip these free prior to earnings. No idea if we can do it or not. And then if we do hit those earnings and we get a couple 100% return, we can go ahead and extend that exposure out. Okay, so same idea that we've had over the last couple of months with the bigger stuff, Microsoft, NVIDIA, stuff like that. We're going to try with VST. The last one I want to go through today, and remember, I need to point something out here. You go back a month and a half, we were opening up like 5 to 10 every Wednesday. That was the market we were in. It is very obvious that we are not in that market anymore. Can we all agree? We just want to be more tactical with our capital. We want to buy the pullback eventually. We don't want all of our money tied up into these short-term trades. If the market pulls back, these short-term trades will probably pull back as well. So we want that capital on the back end to be able to average into some of the better trades here. RBRK though, we've traded this a couple of times. It's been a great trade for us. We were able to buy the original breakout at 38. We caught a majority of the move. We bought it on the way back up post-April bottom. Great move. Here it is once again, sideways consolidation fractal, holding the 50 RSI, spiking back up. Why not? We have earnings in 47 days, which is a little outside of the window, right? Most of the stuff that we've been trading has already reported or is reporting within the next week or two. RBRK has the entirety of August before it reports. So we're going to go ahead and grab this as a software-related play. We're going to grab the September 19th $120 calls for approximately $2 right now. There's no need to chase this stuff, but I'm assuming that if we get the move with the broader market here, this thing could pop back up into all-time highs near 120. We should get that if it works prior to earnings, and if we're able to flip this free, we have another lottery to hold through earnings. I think that's the best part, right? Will we be able to hold through earnings? Yes, we will. That's the best part. We want to be able to hold this stuff through earnings free, and you have the opportunity to either hit a lottery like we did with SoFi. I'm just calling this out here. Yesterday, we got the big gap up in SoFi. And then we saw it subsequently sell off, but we got the big gap up on the SoFi trade, and we were able to take it for free through that. So it was up to you, or you could have closed it before. But that's what we're trying to do with the RBRK trade as well. Give me 1 second, really quick. If you have any questions, feel free to. If you have any questions, feel free to post them now. I'll check EPLD in a second. Maybe I wrote it down wrong. 1 sec. Forgot to unmute my mic. Yeah, I apologize. APLD, I wrote down the wrong number there. You're right, 50 cents, which is great for us. We get cheaper contracts, right? But make sure, once again, you're not risking more than you can lose here with earnings coming up. Answer these questions, Arvin, 26, pullback 2027. Yeah, I hope so. Too late to get into RMBS? Let's look. Chuck, I know you're a little bit bigger of a risk taker than most people, so if you feel comfortable taking it up here and playing it as an all-time high breakout instead of the 70-25, that's totally fine. I would risk 75.50. We'll talk about, if you have questions, we'll talk about that in the Discord. But if you're comfortable taking the 75.50 breakout and giving up a little bit of a buffer there that other people were able to grab, that's totally fine. At the end of the day, this is a mid-cap semi-name post earnings breaking out to all-time highs. So that sets it up as a reasonable name to own as well. RMBS, NEE, 11%. Yeah, exactly. There's other names as well. I don't have Koifin up right now, but for those of you that are interested in that, go to Koifin, go to security analysis, type XLU, and then go to holdings, and it'll tell you like the top 15, 20, or however many are in XLU. And then what I always do is I rank them by year-to-date performance is what I do. And I look at if there's any outliers. And what you'll see is there are a couple outliers in XLU by a lot. And what do they have in common? They're the AI bubble theme. Still like gold? Yeah. It's gold and silver. So here's the general thought process of this. It's not necessarily just gold. It's the idea that any contract or anything, it doesn't matter if it's gold, it doesn't matter if it's NVIDIA, it doesn't matter if it's Microsoft. If I'm buying 6 months of expiration, which in this case I am, right? I bought January, I don't care what happens for the first 3 months. I don't care. If you're worried about timing the absolute perfect entry on an asset that moves as slow as gold, you're going to drive yourself absolutely fucking insane. Now, obviously, I want to point out, I would prefer to own the absolute bottom for P&L reasons, right? If I could time the absolute bottom on every single trade, P&L would be through the roof on every single trade, but it's just not realistic. When you're looking to capture the bigger move here, something has to give. You either don't buy the perfect entry or you don't time the perfect top. My focus here is grabbing the bigger move here. This looks like a consolidation fractal and an upwards trend. And by the way, I just want to point this out. Not necessarily in here, but ever since gold broke out back in March of 2024, my computer's lagging a little bit, I apologize for that. I've gotten flack for owning gold. You know, gold's going to zero, you're an idiot, blah, blah, blah. Like, complete respect to everybody out there that's in here listening to this, but I just don't give a fuck about anybody's opinion. I just don't care. I do not give a shit what people think because most people don't know what the fuck they're doing. They think gold's going down because of something that I don't even keep track of. You know, they talk about the Federal Reserve or inflation. I don't give a fuck. I care about trends. The trend is up and it's within some sort of fractal that I can recognize. And in this case, it's a consolidation fractal. These types of symmetrical triangles tend to resolve in the direction of the underlying trend. The direction of the underlying trend is up, therefore I'm long gold. It's just that simple. So yeah, I'm still long gold. I've recently added into the GLD trade. I believe it was like last week or 2 weeks ago. I'm down on it. That's how options trading goes. Totally okay with it. If the trade idea doesn't work and invalidates, I would look for like a move below 290 or something. If this fractal breaks down, then that trade is no longer valid from a technical standpoint. You don't want to see a consolidation fractal breakdown. I do want to point out though that until gold breaks below an upward sloping 2-day moving average, most trend followers would consider primary trend up, and so there should still be more buying pressure from selling pressure, at least from trend followers. That's how this stuff works. If you're trend following, you have to be able to stomach the consolidation of volatility of sideways pullbacks, etc. if you're looking to capture the bigger move. So not just gold, but hopefully that was a good explanation of any asset. Any asset. You're looking for 6 months, 12 months of expiration. Don't get shaken out the first couple of weeks. Gold looks consolidating at APLD. Thank you, Rob. Fix that. SoFi had an offering is why I pulled back. Yeah, respectfully don't care, but the idea there behind talking about SoFi was the rationality between holding it prior to earnings and not. That's what's more important than SoFi in particular, was what was the thought process prior to earnings. If SoFi was free, which it was worth, at least my position was worth 225% prior to earnings. It was already risk-free. So essentially what I had was was another portion of lottery ticket, essentially. You hold the lottery ticket through earnings. If it doesn't hit, you lose nothing. Just house money because you already took your risk out. If it does hit, you make a lot of money. I call those asymmetrical opportunities. You can't lose, right? You can't lose on those trades. You can lose house money, which in my mind is just Fugazi as is, or you can make a bunch of money. I'm going to take those opportunities more often than not, particularly in a bull market. I don't know which direction earnings are going to move. That's not my foray. I don't know anybody that has any edge in guessing which direction earnings move. I don't know anyone ever in 15 years. I know people that play the premium side of stuff, and expect no move or a big move, but they don't necessarily have a directional bias. I don't know anybody. So what I like to do is in a bull market, I assume that trends are going to continue higher, and if I've covered my risk, I will more often than not let those trades go through earnings. SoFi offering or whatever, this is still an uptrend. Earnings response was great. As you can see, tapped 25 bucks, which was our second price target. And I'm going to continue to buy SoFi as it continues higher. I mean, that's what it is. I don't care about the intangibles. It's not my game, and I still like to trade. But that's the thought process, not just from SoFi, but from every single trade going through earnings. That should be how you think about it. How much can I lose if this trade goes against me through earnings? Can I cap that risk? If I can, it's up to you whether or not you want to hold it through. You know my opinion. I tend to do it. You don't have to do that. You can close everything prior to earnings or whatever. It doesn't matter. Just make sure we're on the same page for risk and the thought process is out there. That was good though. I'm glad you brought that up because I didn't even know there was an offering. Roku's not on the scan today, so we're not going to go through it, but we'll talk through this on the Discord side. Here's the chart that we've had on Roku forever. We like Roku above $100. You could tell this is an older chart because the fibs are on the left. That's how I used to do it. I moved it to the right. This has been in a stage one since the beginning of the bull market. This is a massive stage one. We're looking for a resolution above $100 and then a potential move to the upside. This is as bread and butter as you can get. Stage 1 and 2 is stage 2. If we can get the move off of $100, we'll own it up to 140 and then potentially 200. But until then, no. This reminds me exactly of Roblox. It's the same setup, exact same setup. Massive stage 1. We're just looking for the move above. I see why it's lagging, because for some reason it's recording. Why is it recording? Okay, do you think September contracts could get chopped up with seasonality? Yeah, I think we've talked about it in the Discord. Yeah, I do think so. But seasonality is, I should say the pullback and the volatility is not here yet. So if you want to pre-manage those, feel free. But obviously on the other side, there's always the chance that maybe we don't get the same sort of August that we are anticipating. And then if you sell everything in September preemptively, you don't get to capture any of the August. That's the problem. Everything is a give or a take. So, okay, that's what I got for you folks. I'm going to go ahead and post this right now over on the market research side as well as those 3 trades, APLD, VST, RBRK. I love the questions. This type of stuff matters a lot. So I appreciate you guys on asking those. Last question from Ed Goog. Goog is not a name that I want to own here yet. It's very close. I was using the $200 area to potentially gauge. But Meta is reporting after hours, and I think XLC in particular is going to move off of the Meta report. So if Meta does not do well, I shouldn't say that. If the market discounts Meta post earnings, I would assume that Google pulls back just based off of ETF flows. And if that happens, we could buy this at the 193.75 pivot. I do like Google. I think Google and Meta are both positioned well for new all-time high breakouts. I would prefer to own Google here than add into NVIDIA or Microsoft. I get this question every day. Can I buy NVIDIA? And I'm like, why? This thing is up huge. The time to own it was 148. Microsoft, the time to own it was 465, 470. Not up here in 500. So yeah, I do like Goog. I'm watching it every day. This is a name I want. I'm waiting for the other side of Meta. Worst case scenario, we buy the all-time high breakout. Best case scenario, we can buy on a pullback if the market discounts Meta. But yes, Google is a good one to look, and we will be looking to add that. Okay.